Good evening, traders. Little late tonight, almost 9 p.m. This is 9th of Feb 2022. It was a pretty nice day for the Nifty. Not bad. I think the word that I can think of after today's bounce back, 207 points, 1.2%. Not bad at all. So the bounce back that we had yesterday extends itself further up. 75-minute time frame would show you a nice rally, which has got the index back to that zone. We had been talking about this confluence of various anchored view app, this particular point of control, this few bars which lies here. Yes. So 7450, 7550. So that's where the index lies right now in front of us. The close was quite convincing. Um, the open was good. It held itself for most of the day's trade, a little bit of intraday volatility, not much. But it was the close which was the most convincing part of today's trade, right near the day's highest point. Weekly expiry tomorrow for the indices. And so it will probably try to stay up because of this surprise bounce back that you had may continue to create some further pain for those who are on the other side of this short-term trend. Now that's a short-term trend, but when we take a look at the daily charts right in front of us, this is the Nifty near month futures. It's not that great. Again, I would reiterate what I was, sharing last evening. Is that the first thing that we would like to see is whether it bounces back and finds itself at 450, 550 zone or not, and it has done that. And the next thing is you will also notice that the moving average has started to improve. The MACD, all the price derived indicators, of course, with the price they will improve. The million dollar question going forward is, will they sustain? The daily charts does not suggest so, in the sense that the trend is down. The shorter time frames will reflect that tomorrow or after day after tomorrow's trade. If the index fails to sustain, then the next week and forward further, we might get good shorting opportunities if that happens. But it's an important juncture where we are going towards. Bank Nifty was also fairly supportive. It kept on stretching itself further up on the upside. In this particular volume profile of this fall, we can see that during this time the point of control is around 38,800. So that's where probably this index will find itself some bit of resistance, if at all. Now, this level is not that bad because you had a gap up which failed. You had the previous high, 1st of Feb, you had the highs, 18th of Jan, you had the highs, 12th of Jan. So, this is not at all a bad level. This is quite a important level for the Bank Nifty near month futures. So, 38,800, 900 odd points. So, yes, as it goes there, as Nifty finds itself towards 550, it can slow down. It may slow down. I would reiterate, Bank Nifty is in an uptrend. So this outperformance, this strength from the Bank Nifty has much higher chance to continue than from the Nifty. Nifty's has to deal with the weakness in IT. It needs to deal with the weakness in pharmaceuticals. The real estate tried to bounce back, but then couldn't. It has to deal with the weakness in real estate and FMCG. So these are the various sectors which will probably keep the Nifty down. But if someone has to show some outperformance, it has to come from Bank Nifty. It has to come from auto, phenomenal chart, and it looks like stocks like Maruti and Tata Motors, etc., should continue to perform from here. Metals trying to get back to that previous, mood of outperformance, and it has done pretty well. As you can see, most of the performance are positive. And energy, this is too much bias towards Reliance. Not a very clean, pretty picture, some kind of a symmetrical triangular. And that's why when we break the Nifty and the overall market in terms of the various sectors, we tend to get a mixed feeling. We tend to get positivity from banks and auto, but a little bit of worrisome from pharma, from IT, from healthcare, from FMCG. So that's why we need to be careful with each and every move of the Nifty and the Bank Nifty and overall sectors. We should not get carried away if everything is going up, and we should not also get carried away when everything starts to fall. I think it's going to be a choppy market. going forward, and a little bias on the downside. I would keep this marked red as long as my moving averages are well, sloped on the downside. And only once I find the prices managing to figure itself back into an uptrend, should we go in an aggressive bullish move. Till then, I would say cautious bullish, cautious bearish is not a bad approach. I hope you've been trading good. And yeah, when the times are volatile, it makes more sense to take care of your risk and wait for the better times to come. That's where uh, relatively better trades, profitable trades comes much more easier. These are difficult times, so different approach for these difficult times. Take care of yourself and trade well.